Good morning all. Today we are going to present the audit report that we have done of Jaron Property Private Limited. So we will be discussing key elements of the audit process including engagement team, introduction, risk management, income statement analysis, income statement comparison, finance position analysis, finance position comparison, comparison relevance to practitioners, auditor responsibilities, deliverables, conclusion. First, let me introduce our engagement team. So we have team members assigned to various roles. These are Ms. Umesh Rathnayake work as a leader, Mr. Tarindu Galpatha work as a partner. I am the director of the audit team. Ms. MAIB Sewwandi is a senior manager. Ms. Ayodhya Dewani is a manager. Ms. Amali Yashodara work as a chief auditor. Ms. KGA Madhuwanthi work as a senior auditor. Ms. BMPK Basnayake is an assistant auditor. Ms. BMPK Samarasinghe is a supervisor and Ms. KGA Abeysekara work as an associate. So next introduction will be continued by KGA.
Thank you, Angelika. Jaron Property Company is a private limited liability company incorporated and domiciled in Sri Lanka on 26 November 2020. The registered office of the company and the principal place of the business is situated in Goa. The principal activities of the company are to carry out business of constructing, developing, owning, operating and managing hotels, restaurants, guest houses, holiday homes and holiday bungalows in Sri Lanka. When it comes to the company's hierarchy, at the top they have high-level management, which consists of board of directors and senior management, including chairman, managing director, and department heads. They are responsible for setting strategic goals, making major decisions, and ensuring the company moves in the right direction. Next, middle-level management. This group plays a crucial role in translating the company's vision into actionable plans. It includes teams like development and construction, property operation, finance and administration, sales and marketing, and facility management. These teams ensure a smooth day-to-day operation and effective execution of company strategies. Finally, they have low-level management, which consists of site supervisors, guest relation officers, front office staff, housekeeping and maintenance staff, and technical staff. They are the backbone of the company, ensuring daily tasks are completed efficiently and clients receive high-quality service. Thank you. Next, I invite to present the next slide to Amali.
Thank you, Keshari. Tricks is an inevitable part of any businesses, but how we assess and manage it determines our successes. Today, I want to highlight three critical risk areas. Number one, financial risks. Cash flow issues, credit risks, and currency volatility can disrupt operations and limit growth. A solid financial strategy and proactive planning are essentials. Second one, operational risks. Quality control failures or technological downtime can hurt efficiency and reputations. Investing in robust systems and continuous improvement is key. Third one, compliance risks. From environmental regulation to labor laws and tax compliance, businesses must stay ahead of evolving legal landscape to avoid penalties and reputational damage. By identifying these risks early and implementing strong mitigation strategies, we can protect our businesses and position ourselves for long-term success. Let's stay proactive, prepared. Thank you. Over to you, Mishi.
Thank you, Amari. In auditing, internal controls are essential for detecting and preventing errors, fraud, and operational inefficiencies. There are three key types: preventive, detective, and corrective. First, preventive controls are proactive measures designed to stop errors before they occur. Auditors assess whether an organization has a strong preventive control, such as authorization procedures, segregation of duties, and cybersecurity measures. Next, detective controls help identify issues after they have already occurred. These include reconciliations, internal audits, and financial reviews. Auditors analyze these controls to ensure the organization can effectively detect risk in a timely manner. Finally, corrective controls address issues once they have been identified. Auditors check whether organizations have mechanisms in place to fix errors, adjust financial statements, and improve policies to prevent recurring issues. A strong internal control system is crucial, ensuring transparency, accountability, compliance with regulations. By strengthening internal controls, organization can reduce risk and improve overall efficiency. Over to you, Kavya.
Thank you, Nishi. Then I am going to explain the income statement analysis of Jaron Property Private Limited. To that, first let's talk about the revenue. The company earns revenue from the foods, beverages, events, luxury experiences, transportation, and the other services. To ensure accuracy, revenue should be recorded using the proper auditing standards. And the next, we have the cost of sales, which includes expenses needs to generate revenue, such as the salaries, travel cost, maintenance, and the professional fees. Income is calculated after deducting the cost of sales from the revenue. It includes expenses like raw materials and the labor cost. Finally, expenses are represent all the costs required to run the business, including salary, repairs, and audits. These factors affect the company's overall profit or loss. Here we compare financial performance across 2 years, 2024 and 2023. Firstly, revenue has increased in last year, 2024, while administrative expenses also have significantly increased. Revenue and administrative expenses that both have decreased performance in 2023 compared to the 2024. Despite this, as the slide show, the net profit and profit has improved in 2023, showing that the company has managed the cost effectively. This comparison helps to understand financial trends and make better business decisions. And over to Piru.
Thank you, Kavya. In the context of auditing, these figures would be described and analyzed by focusing on the changes in financial position, comparative analysis, and ensuring that they reflect a true and fair view of the company's financial health. The first one is asset comparison. In audit focus, auditor will verify whether the increase in assets align with proper documentation such as purchase orders for equipment and evidence of increased cash reserves. The next one is equity comparison. Equity has risen by compared to the previous year. The auditor will examine the retained earnings to confirm they reflect accurate calculation aligned with the profit or loss recorded in the income statement. The next one is liabilities comparison. Liabilities have increased by compared to the previous year, which can be attributed to increased trade and other payables. The auditor will review the details of the increased liabilities, ensuring that the trade payables and other payables are properly recorded and substantiated. Thank you. Over to Hanli.
Thank you, Puni. In this slide, I want to discuss a few Sri Lanka audit standards that are relevant to auditing practices. These standards help ensure the integrity, accuracy, and quality of the audit process, which is important for providing reliable financial information to stakeholders. Let's go through some of the standards that guide auditors in their work. First, SLA US 230 emphasizes the importance of thorough documentation. It ensures that every decision, judgment, and finding during the audit process is clear and transparent, making the work both reviewable and accountable. Then we have SLA US 500, which underscored that need for auditors to gather sufficient and reliable evidence. Without strong evidence, auditors can't confidently form conclusions, which are critical for ensuring the fairness of financial statements. SLA US 220 focus on maintaining quality control throughout the audit process. This standard ensures that all auditors comply with the highest standard and best practices, providing consistency and reliability in audit results. Finally, SLA US 517 addresses the critical assumptions of going concern. Auditors must evaluate an entity's ability to continue operations, ensuring the financial statements accurately reflect the organization's future stability. Finally, we can say that these standards are not just guidelines, they are essential tools for the auditors to maintain trust and confidence of the public and stakeholders. Next, over to you.
Thank you, Pumi. Today I will discuss the key audit responsibility and procedure that ensure financial intention and compliance. The first step is any audit is risk identification and asset understanding protected that like financial misstatement, fraud, or operational offenses. Once risks are identified, we design and implement an audit procedure to systematically examine financial and non-financial information. This includes reviewing statement policies and internal control. If discussing or found, we report, maintain a misstatement, ensure transparency and accountability. But the audit does not stop there. We also confirm the effective of continue action take to resources the issue ensuring long-term improvement. Currently, accept the audit process is the relation and is safeguarding audit related document. Prepare record keeping help mention complaints and provide the relatable receivable future audit. Finally, planning and executing the audit efficiency ensure efficiency and action. A well-structured approach minimizes dispersion and maximum the value of audit. Thank you. Next over to Ishini.
Thank you, Vahandi. We deliver to key audit documents including engagement letter, audit plan and audit report. Our findings confirm compliance with SLFRS and IFR standard. Before we begin in the audit process, we need to have a formal agreement between management and the audit committee. It is an engagement letter. It is ensure clear understanding between two parties and provide legal permission to begin in the audit process. Next, we prepare the audit plan. This was prepared after the signing of audit engagement letter. It is strategic document that outline how the audit will be conducted. After the audit, we provide a draft audit report before issuing the final audit report. It is a summary of the auditor's findings, concerns and recommendations. It was shared with management for their feedbacks and responses. Next, we prepared final audit report. It is a completed and polished version of the draft audit report. Finally, we delivered the audit opinion letter. It was a formal statement issued by the auditor who communicated professional opinion that the financial statements are true and fair. These are the deliverables in our audit process. Thank you. Next over to Tarit.
Thank you, Ishini. To conclude, this audit has provided valuable insight into the financial health and operational controls of Jaron Property Private Limited. We have examined key risks, financial performance, and compliance with auditing standards. The findings show strong internal control and a positive economic outlook ensure the company is on the right track. Auditing plays a crucial role in maintaining transparency, accountability, and trust. By continuously improving financial processes, we can drive sustainable growth and long-term success. And then, thank you all for your time and attention in listening to this presentation. Thank you all.